Good evening, traders. Adam here from Bull Logic doing the market analysis with you on this Sunday evening. Hopefully, everybody had a great weekend. I know I sure did. Got in lots of rest and relaxation. And now I'm ready to start the week. So, what is in store for the market going into this week? Well, first, the market is still in the oversold condition, at least in the short term. You can tell by looking at the stochastics, we're still under that 20 at 1494. We are going to need at least one more day of consolidation to really pull us out of that oversold condition and allow us to be able to move a little bit more freely, especially to the downside. Looking at the upside, I'm just not seeing upside potential here. The problem is the Bulls just cannot get off the pot. They just do not want to get going here. That 1420 strong resistance coming in right here has been keeping the Bulls at bay, especially for last week. We tapped it once, we tapped it twice, and we just have not been able to do anything. So right now we are just moving in a very nice sideways pattern. And I would still say the trend is down right now just because this is very typical. We're working off our oversold condition through time, not through price. There's two ways to do it. If you go through price, that means you're going to have a pullback in the opposite direction. So since we're going down, that would mean we need a pullback, in the upward direction. You're just not getting that. The other way is through time, and that's just by going sideways through time, like we did over here. You can tell we went sideways. We were overbought. You can see it. We pulled out overbought. We shot back up. We pulled sideways, and then we shot back up again. Same thing I'm expecting over here. Just because we are going to usually continue the trend when you have a pullback like this, you're just going to continue the trend of going down. So we move sideways and then we go lower. Our next stop is this 1397. It's a weak support, so don't expect that to hold too much. We also have that 1390 and the 200-day moving average to come in and help support this market in some way, shape, or form. What we are seeing in the market is just a complete lack of confidence in companies. They are missing earnings left and right. You got Apple missing, you got Amazon missing, Netflix missing, Microsoft, IBM, Chipotle. All these big players are coming in and they are just missing earnings. I mean, it's just no hope whatsoever. I was really hoping Apple and Amazon would be the shining star, get this market turned around, get the something behind the Bulls' legs, get them moving. But no, they both came out and missed, even though Amazon actually did finish up for the day, nice 6%. Apple finished lower. Of course, came down and hit that 200-day moving average, perfect buy-in for everyone who bought in. It's a very easy buy point, that 200-day moving average. Set your stop under it and see if you can't get a bounce. That aside, still a miss in earnings. They are cutting their forecast for the next quarter, and they are missing on the last quarter. No confidence whatsoever coming into this market. Hopefully, we can get some kind of push going into the upcoming elections. Maybe that's going to help drive the market. I'm not really sure how the election is going to help the market. Romney wins or Obama wins, if it's going to be a bull or a bear. I don't really know. We're just going to have to play that one by ear when it does happen. But hopefully, we can get some kind of upward movement out of it. Till then, the trend is down right now, at least until we cross over that 1420 level, and then we have the 50-day moving average that's starting to flatten out and really start to be our next main resistance. We already got the 20-day moving average coming down, which shows us that we are going down in the short term. 50-day moving average is flattening out, which means we are flat in the intermediate term. And we still have the upward 200-day moving average, which means we are going up in the long term. But this all could change rather quickly, especially if we start to break down here on these very important levels like the 1390 and the 200-day moving average. So very defensive here just because I'm not seeing the potential for the upside. Bulls just cannot step in and take over this market. There's just something going on in their minds that they're just waiting for, and it's just not here yet. So until then, we're just going to have to wait and see where this market's going to go. Just going to run through a quick couple of charts. We got the NASDAQ, nice little action today, really helped by Amazon. Apple wasn't down that much. Amazon was up 6%, as you saw. Nice little base on that 200-day moving average. Is coming out of oversold territory. We might actually get a nice little bounce here up into this resistance, but I wouldn't expect too much out of it. Again, not until we see some kind of conviction out of the bulls. Russell 2000, just kind of mulling around here above that 200-day moving average. Already setting the base there on the 200-day moving average. Is it going to break? Is it going to hold? It could go either way right now just because this isn't oversold. The Russell 2000 is not oversold. It has this nice series of lower highs, lower lows formed, so we could bounce into that 50-day moving average and still keep the downtrend going. Again, looks very weak here just because of our loss of support. We had the potential to bounce, not happening. It looks like we probably pushed through that 200-day moving average a lot quicker than pushing up through that 50-day moving average. VIX is staying elevated at these 17 levels, down 1.77% going into the weekend. That's pretty typical. Just going into the weekend, you get the weekend effect of volatility coming out of the market. Expect it to get shoved right back in on Monday. So nothing big here, except that we are at those elevated 17 levels, not the sub 17s like I was really hoping for to go through to the end of the year. So we're going to see if the VIX is going to stay up here or is it actually going to break through or come back into the 16 to 13 range like I thought it would. Gonna flip through some sectors with you. Housing is starting to look a little bit weak. Can it hold this 20-day moving average? It had the perfect time to break out. We were telling you in one of our market analysis that it was setting up for a nice breakout. Is it now? Not really. Now it's kind of flirting with that 20. You'll probably find support on that 50-day moving average. Energy, kind of a nice bright spot here in the market. It's up a little bit. It is oversold, kind of basing on that 200-day moving average. Does have the 50 right ahead. Still looks like a good sector that I may want to try some longs in. If I have to pick a sector to go to, it might be energy this week. Materials, same thing, kind of basing here on that 200-day moving average, kind of fell through. It is oversold though, so it's not going to be able to drop too much further without getting some kind of sideways movement or a pullback. Again, materials are another sector I might like to look at. Utilities, utilities are a defensive sector. They move real slow. I'm not a big fan of them. Nothing's really going on there. Technology still looks like death. And unless Apple can finally turn around, Amazon is not going to be able to pull this whole sector up all by itself, especially after Netflix missed. Financials do look pretty good. I still like to look at financials, even though we did break the uptrend. We see we cracked that higher low here, so now we are below that, but we did find support on that 50-day moving average. It is oversold. Financials look good for a nice bounce. So get your charts out on some banks and see if you can't find anything that's setting up, especially if you can find some bank stocks that are setting up as bounces. Might be a good time to actually try to swing those. And biotechs look like death, still very oversold here, coming down on that 200-day moving average. Should be an easy buy if it gets close to that 200-day moving average, just because that's a good risk reward point. All right, everyone. Sorry to bring you the grim news here on a weaker market, but I'm just not seeing very positives here. It does look like the trend is down, and it will remain that way until we can see some kind of conviction out of the bulls. Good luck during the week. We'll be back with you during the week to bring you more market analysis day by day.